This conference will now be recorded.
Okay. 2 o'clock Eastern. I'll give it a few more minutes, and then we'll start. Okay. For those of you that are logging in, if it's possible and you could share your video. I'm really lonely here in Cleveland. I don't get much personal interaction, so put your camera on if you can. Love to see some friendly faces. There we go. Jeff Payne's in the house. Carmina, nice. Hi, Chad. Mark, Patrick. Patrick always puts his camera on, so appreciate that. Peter from California. Now I'm feeling more comfortable. Dustin, we get to see your ceiling, so thank you for that. Okay, we're gonna hop on in, and I'm sure some more will be joining us as we go. So thank you for joining our July finance call. Again, thank Markham LLP, our finance ambassador team, with Dave Mustin today on cash flow and budgeting, and our sponsor today, American Express. Just a few housekeeping items. This would be a great opportunity to be interactive. We want to try to make these interactive as possible. Sometimes it's challenging through the video call, but don't be bashful on this call to ask questions. I know some have emailed me to see if they can ask some questions during today. I know that COVID and what's going on in the marketplace, it's varying from market to market. That it's a very important time to manage your finances and manage your finances properly, and be ready to pivot when necessary. So we're going to be talking a lot about that. So thank you guys for joining. A few housekeeping things as well to keep things moving. Even during the call, I'll try to solicit some response, but you have a chat box on the top right corner of your controls on the top. Even if something comes to mind while our speakers are talking, you could enter something in there, and I'll make sure that we address any questions. I know that Dave mentioned that he has a little more flexibility on this call today, so if we happen to run a little bit long, there will be a lot of Q&A opportunity even at the end. I wanted to touch on that, but let's dive right into the presentation. Amanda, I can't forward, so maybe you can move those next slides. Okay, here we go. Just a point of interest, each meeting it's required to mention that our group follows all antitrust laws, and our policy is here. If anybody needs a copy of that or has any questions regarding that, feel free to call Amanda or myself on the antitrust policy that we have in place. It's very important to the lifeblood of our group, and that's that. So again, try to do the best you can to keep the background noise to a minimum, and mute your phone or computer. If you're on your phone, mute your computer or vice versa, so that we don't have any conflicting audio. But again, we want to encourage interaction, so feel free to put in the chat box, and then we will also unmute you so we can talk. I'm really excited. I know we've rolled this out, but we're starting to get a little bit of traction, have a lot of good opportunities with our sponsor, American Express. Glad to have Austin, who's our new personal representative that represents the Rockheads group, make sure that our experience is going well and that we're maximizing every opportunity that can help your business. And so I'm going to turn it over to Austin to kind of get reintroduce some of the details of this program, some ways you guys can take advantage of it, some strategies. And it also is a great topic that parlays into our topic of cash flow and budgeting and increasing working capital, which I encourage that we do during these times. And American Express has a great program to help us do that. So the timing is perfect for us. So Austin, I'm going to turn it over to you and take it away. Austin, you there?
I'm wondering if he muted us.
Austin, can you hear us?
Where did we go? We just had him.
You guys hear me?
Yes.
Yeah, we got you now.
Yeah, I was wondering, I was like, well, it's been a few minutes. I don't hear anything. So here we are. So, John, I'm guessing you've gone through the intro a little bit.
I did an incredible intro for you. They're all pumped up and ready to go. So you're up.
Hey, Rockhead members. My name's Austin Guyan. Just a little intro about me. I've been with American Express for 10 years. Spent the last seven to 8 years heavily focused in construction, both with contractors and subcontractors, and really excited about this partnership with Rockheads. It fits a mold that Amex does really well in. And I'm just wanted to thank John for their partnership, and really excited to see what kind of benefits that we can bring to some of the members. With that, I wanted to kind of start a little bit around what are some of the benefits for the members, and one of the things that I wanted to touch on was Amex has a model where I'm one of 300 people in all across the country that you can lean on and leverage to use at your disposal for these type of programs. And so I think that's big when it comes to programs or solutions like this, that Amex has your back when it comes to support and or needs and customer service. So I want to switch slides here. So one second. Amanda, can you go back? So at a high level, the way that Amex partners with contractors, subcontractors, Rockhead members, we really like to present this as a solution that really helps companies from a cash flow perspective, efficiency perspective, and really from a bottom line savings perspective. This slide's really busy, but it illustrates some of the benefits that some of the cards have, and some of the flexibilities that some of the cards that some of the business owners have access to. And whether it's points, or whether it's cash, or whether it's extended terms, a lot of people are COVID has hit companies in all different ways, and so really what we wanted to do is illustrate the ability based on kind of needs. We can provide a solution or a card that kind of fits their mold or their lifestyle. And that being said, there's really, what I'd like to do is, because this is a financial type of environment, I really don't like to illustrate the Amex program as a card, because you think about the card in your wallet, you don't really think about going and buying $100,000 pieces of granite, marble, or I like to think of it like a payment vehicle. And this payment vehicle really will allow you to leverage the Amex solution at large. So try as we go through this to not view it as a physical card, but just a payment mechanism that you can leverage to pay some of your largest vendors and suppliers, whether that's marble, granite, the different suppliers or different types of machinery that you guys use seem to be good fits for the industry. So this slide really, at a high level, this is why a lot of customers, whether you're a general contractor, subcontractor, some of my largest clients are in the utility space and buying pipe and different things. I have large fabricators as well. And the idea of using or leveraging solutions like this is the working capital piece. And hopefully this gives you a little bit of illustration around how customers maximize their working capital from with their suppliers, given the terms, and whether marketing, whether it's your granite, machinery, different things. Most companies are on a 30-day, and we like to say on average you can see an additional 30 days on your existing terms by leveraging this type of solution or leveraging American Express. It works really well with a lot of suppliers, and there are suppliers out there, and one of the keynotes that I'll be touching on here in a second is just our ability to work with your suppliers to get in a program like this or not charge a fee. So Amex is unique in the market. We're different than a Visa, MasterCard because we own from card to merchant. We own the entire suite of business. And on the merchant side, we like to refer to it as a network, as our closed loop network. So what does that mean for Rockhead and Rockhead members? Well, what it means is we have a team of people similar to me all over the country that can work with local suppliers, regional suppliers, national suppliers, based on need to either get your suppliers signed up into this program to accept American Express, or in a lot of instances, in speaking with John and some other members, there may be opportunity to look at fees that are being potentially charged and what we can do from our perspective to maybe help mitigate the fees, aggregate spend between members, or potentially aggregate buying power between members in order to maybe reduce or eliminate. So when you think about American Express, we really like to think about it more as a partnership. And I hear all the time, well, I have a Capital One, or I have a Chase card. They don't have this model in this B2B space where we can really work for you to get suppliers signed up. So on average, we see about 30 to 40% more spend in an Amex program than a traditional Visa, MasterCard because of this ability. And B, the way that our merchant network works is that we encourage your suppliers to accept Amex by giving them discounts on large purchases. So that really changes the dynamic. And then the third piece is really the way that the Amex programs work is we're, based on, it's not every company, but based on your company, your size, your, health and wealth of your company, this is all Amex does. And so we really leverage or underwrite customers to give them the largest limits possible or the biggest flexibility, unlike a traditional Visa MasterCard where, you usually see a 20 to 50 to $100,000 limit. And, in some of these programs, you can see upwards of $500,000 line or limit with American Express. And that really will allow you to maximize that working capital piece. So we touched on the program at large. We touched on kind of where it makes sense from a working capital perspective. We touched on how MX partners, with you guys locally to really enhance the program, both from a
it
merchant.
makes sense. I mean, they're supposed to do all the legally required stuff for us, right? Yeah.
I hear someone not muted, but. So the last piece really is what's in it for you or for the owners. And this is kind of the rebate. I like to refer it to as distribution because there's a multitude of ways, whether you are going at this from, depending on the program that you're in. So I'm going to go to the next slide. Or try to here. There we go. So the rebate is as you probably know or familiar with, either in points or a cash rebate. And it's really it's the flavor of whatever is most important. I personally, and most of my construction companies personally, like the points because they have the ultimate flexibility, both from a tax perspective, and just the ability that points aren't taxed. And we really view I personally view it as a distribution to an owner that can be used in the business or it can be used personally. This example is a newer partnership that American Express has with Charles Schwab, where you can actually move points that you earn through this program to Charles Schwab at 1.25%. So for every million points, you can move that tax-free to Charles Schwab. So that'd be 12,500. And then you could either put that in the market, you can 401k, 529. There's a multitude of ways to invest this outside of just cashing it out at a cash value. Obviously, their points aren't taxed. And so there isn't a tax or a 1099 for this exchange. And most owners find value in how can I increase my net income without increasing my taxable income. And this is a great way to leverage a program and or a tax strategy around leveraging points like this. So I talked quite a bit. We went over what I consider the three biggest pillars. What I'd like to do next is see what questions that I can answer about the partnership with Rockheads, about the program at large, just any questions that you guys have, I'm happy to answer.
Yeah, Austin, there's a question from John. John, I don't know if you're, I can let you ask the question or I can ask it for you. So the question is that if you already registered with an existing Platinum account, can we have it registered through the Schwab setup, or would they have to set up an entirely new account? How do they go about doing that?
So what I'd love to do is I can, John, if you can provide John, or my contact is here. Email me. I have the step-by-step of how you would go about setting up the Charles Schwab piece. And I'm happy to on a one-off, if people have questions regarding that, set up additional time to walk through that piece. What I want you guys to view me as is I'm kind of like the pointy end of the spear. And whether you have an Amex and you're not using it like this, whether you don't and you'd like to get signed up, or whether you are looking to, add suppliers, I'm your kind of stopgap or starting point. And then, I work with people all over the country to introduce and or facilitate the local contact, so you have someone in your backyard that you can work with as well. And along the way, I'm partnering with all of these people, through and through. But we like to have local representation if COVID ever ends, where they could potentially come out and visit you. Just have someone in your backyard for that can really help you with this program.
One point I'd like to make is, as I constantly trying to bring new programs for our members, one of the powers that I saw for previously being a fabricator myself, and things that I ran across that I'm like, man, this could be a very powerful program. But what can the Rockheads do? And the power of the Rockheads being a group purchasing organization as well as a best practice organization. What is the partnership, and what's it allow us to do? So there's a lot of times where you're going to have a barrier, maybe with a major supplier, MSI, Cosentino, Cambria, where you really want to make these major purchases, but certain markets, they all behave differently, just so you're aware. So we can use the power of our group. If you're getting a barrier on how they're charging, or if they're charging to use the card, one market might, another one might not. I reach out to Austin and say, I'll go to bat for Florida Custom Marble, and I'll go to bat for them and say, Austin, can you give a call to their stone supplier and encourage them to use the program, and they'll help facilitate that and not get charged if you're running into some barriers. So that's part of the power of doing this with our group and using that leverage to try to maximize the capabilities. Also, being a prior I am a CPA, but a finance guy, I thought of a way of doing pretty good tax distributions or pulling money out of the organization that kind of gives you some forced savings, taking some money off the table, some risk, that without creating a taxable event. I thought it was a real neat way of doing it as well.
Yeah, that's a great point, John. There's, every company that I run into that, and so our space is 0 to 300 million in revenue. And, there's not an owner that I don't run into that's looking for ways to generate additional working capital income for introducing a platform like this or a program. And I want to illustrate, the value of the points are kind of varied based on how you use them. A lot of people use them for travel, and at face value, most of the points are worth about 2%. So, for every million, it's about $20,000 in savings that, you or your owners can be using or leveraging as a distribution. And so, this isn't kind of a nice to have. I view it as kind of a must have, because it really allows, multitude of flexibilities with A, working capital, B, our ability to help navigate with your suppliers, and then C, obviously driving additional revenue down to your bottom line.
Okay. Well, Austin, thank you for your time. And if anybody has any future questions or things, you can reach out, points to make, you can reach out to me and or Amanda, and we'll get your questions answered, and we can continue to dialogue in this. So, Austin, thank you for your time. Thank you, American Express,
Yeah, thank
for
you.
supporting the Rockheads. I'm going to turn it over to
Absolutely. Good job.
Dave, our finance ambassador, and get in the meat and potatoes of our topic today, which is cash flow and cash flow budgeting. So again, Dave Mustin from Markham LLP, take it away.
Thanks, John, and thanks, Austin, for setting my presentation up well. I think you did a great job talking about cash flow and making sure that liquidity is available, because what I would say at this point is, from an accounting perspective, our view is that liquidity and availability of credit lines is incredibly important to organizations right now. And anything you can do to increase liquidity is critical and important. We'll talk about that more in a minute. So just a quick introduction. I'm a partner with Markham. If you haven't heard of Markham before, we're a national audit, tax, and advisory firm based out of New York City. I happen to be based in Cleveland, Ohio. I've been consulting for 25 plus years across all sorts of industries. I would say construction is one of our strongest industries. We have a huge presence here in Cleveland, and we're really excited to be working with Rockheads and presenting these materials. So thanks for your time today. When we talk about budgeting, I like to think it's really important that budgeting forms a basis for where an organization wants to go over the year. In this time when baseball is starting back up, I thought it was really important to quote that great mind from baseball, Yogi Berra: "If you don't know where you're going, you might end up somewhere else." In this time frame where we are actually in a pandemic, where we are in a financial crisis to an extent, where we have suppliers challenged about viability in business, where customers don't know what they're going to buy and when they're going to buy, it's really important to lay a baseline down around budgeting and to understand what your expectations are for a fiscal year, for a financial year. To me, a budget is really a plan. It says, here's what we expect to take in as far as revenue, here's what we expect to spend, and it allows me to balance those two and make sure that we're spending always on our priorities. And this year, when so much has changed, it's really important to understand what your priorities are and what you really want to spend on, because it's very easy to get distracted. It's very easy to spend money in areas that may not be a priority, and staying rigorously attuned to a budget is vitally important these days. So budgeting is really about creating a plan. So if someone's got music playing, if they could turn mute their mic, that would be helpful.
Amanda, can you see her?
There we go. Thank you. So I used to talk to my wife when we travel and take long distance trips with the kids, and we'd never get in the car without a plan about what routes we're going to take, about where we're going to have stops with the kids, about what the timing, length, and duration of that is. And in some sense, that's what a budget is. We want to know what your real priorities are for the year, what you want to spend money on, and do you have enough money to spend on your priorities? In this time frame when things are incredibly complex, we don't know when cash is necessarily coming in. We don't know when expenses are coming out. If you don't have that plan and that budget to track against, it's very difficult to track the performance of your spending and whether you're on track or off track. It allows you to make decisions in real time. And spending is incredibly complicated for a number of reasons. So, as working for an accounting firm, we think that most of our clients on an accrual basis, and that's that you book revenue on contracts and that you try to match revenue expense up. But what happens is that accrual doesn't really match cash flow.
I'm on the phone.
When it goes out.
I'll call you.
And so the challenge is, if you're working off an accrual model, it doesn't match when cash actually flows into and out of the business, and that will complicate things. There are challenges to managing cash on hand, timing for accounts receivable, timing for accounts payable, and when you commit to things through POs, right? So Austin talked a few minutes ago about floating cash between supplier timing and credit card timing, and that gives you an extra luxury on time management. Well, that time management is really important, and staging when you expect cash in and out is important, because what we see now with our clients, there are many clients running very, very thin margins, which hence the Paycheck Protection Program that just went on was try to buffer those margins up to give companies working capital and allow them to make to stay in business and be viable. What we also see is people think about the coronavirus going on, people think about challenges going on with financial liquidity. We also were very focused earlier in the year and late last year around the trade war with China. And that has huge implications for our ability to get supplies in a timely basis. And to be able to fund tariffs was a huge issue. Back in August of last year, there was challenges around tariffs. And many companies got hit with anywhere from 10 to 25% tariffs on imports coming out of China. We also have issues around seasonality, and all that's been thrown to the winds based on what's happening with COVID-19. So managing cash flow is incredibly complicated right now. And what a budget is designed to do is to help you understand what's supposed to happen when and manage your cash much more efficiently. So what we also find is there are a number of issues that complicate the budgeting process. It can be time consuming to sit down and plan out what should happen when do you want to spend it. It takes some time to get that set up. You run the risk there's inaccuracies, especially the first time you're doing a budget. You understand that this is a guesstimate, this is a plan, and there's no way you'll be perfectly accurate because things change throughout the year. So you just have to monitor that, and you try to adjust for that through things called reforecasts and understand that cash may come in differently and go out differently throughout the year. Reforecasting tries to adjust for fluctuations during the year and tries to give you an updated plan based on how cash comes in for clients. We'll talk about that more in a minute. Some organizations have experienced what's called gaming, right? So we've heard stories about if you don't spend all your money, you lose it. And so people will sometimes hold off on spending money until the end of the year or end of the quarter all at once. And so those blips tend to throw things off, and that doesn't help anything at times. We also find that if people overspend budgets, that sometimes senior management tends to blame people who get off their budget or spend a lot early or spend a lot late or don't conform to the budget, and that doesn't help people's compliance. So you'll see a lot of behaviors there that complicate things, that make it very difficult, but it is incredibly important to lay this plan out. Without a plan, you never know where you're going to end up, as Yogi Berra said, and what we want to do is help you figure out how to get to where you plan to be, and that you're spending money on your top priorities, not just what happens to you throughout the course of the year. So some of the benefits of budget allows you to use cash very effectively, manage your dollars very effectively, and make sure that you can deliver products on time to your clients, manage your seasonal fluctuations, client fluctuations, and make those things happen appropriately. That the dollars go to the things that are really important priorities for your business, not just what's opportune and top of mind at the moment, or the urgent crisis that happens in front of you right now. It allows you to check your performance, not just of your finances, but also of your people as well. Do your leaders, do your salespeople, do your operational people tend to adhere to sales estimates? Do they adhere to the expectations you have for them, and they can deliver against that? So are your people doing a good job about affecting what your priorities are? Can you adjust those priorities based on changing market conditions? Now, I have never in my life been through a situation where we had a financial crisis, a trade war with foreign countries, where we have a COVID-19 pandemic, where we have race riots, where we have energy market fluctuations, as we had a few months ago with the energy trade war between Saudi Arabia and Russia. I've never seen that kind of fluidity, and it's really important to stay grounded. And that's what a budget helps you to do, is try to work your way through all those changes. And it helps you make decision making because it reconnects you back to your priorities that you set out at the beginning of the year. And if you run a budget in concert with things like a 13-week cash flow forecast, 13 weeks being a quarter of the year or 3 months, it allows you to see how cash is coming in where cash is going out. It allows you to understand and try to identify problems before they occur. One of the worst things that can happen to you during the course of the year is you run out of cash. First of all, you need to have the cash flow. If you don't, you're going to turn to lines of credit. You'll turn to credit cards. It's great if you have those, but if you haven't prepared for those, it can put you into significant problems, impact credit standing, can impact covenants with banks, and can impact many other factors, relationships with customers, and impact relationships with your suppliers. And the worst thing that can happen is you end up getting cut off from your suppliers, can't deliver to customers because you don't have the ability to pay your suppliers and keep them in business, right? So it's really important to manage cash flow appropriately, manage the plans, manage your cash coming in, your cash going out. And that's what a budget is designed to do, is to keep you in business and make sure your priorities are tuned to as you lay them out at the beginning of the year. Now, there is a specific budgeting process that we recommend clients follow through, right? And when you start this process, it really is important to start a number of months before the end of your fiscal or calendar year, whichever you're set up for, right? This can take a few months to get through, and it's important to start your process early. And many organizations start in the August-September timeframe, starting to lay these things out, because hopefully it's an iterative process working with your team leads to try to get this stuff to happen. So step one really is understand your performance from last year and prior years, if you want to go back 2 years or so, and understand what went well and what didn't go well. And did you hit your cash targets? Did you hit your revenue targets? What changed and what worked and what didn't work along the way? Also, it's really important to check back in your marketplace and look at opportunities and threats. Where are there opportunities in the marketplace where you can deliver new products and services out there? Where can you address new competitors and new threats that have risen up in the marketplace, and take those into account in your planning? Do you need to make adjustments to pricing? Do you need to change the way you market and sell? Do you need to make more investment in your salespeople, more investment in your marketing plans? If you don't look at what's happening around you, you're going to miss something, and it's very likely you're not going to invest and plan and budget appropriately for the upcoming year. So coming out at doing an assessment of what's gone well and what's gone poorly over the last couple of years and what's happening outside in your marketplace, it's really important to establish a business plan for the year. This doesn't have to be a 30-page plan. It can be 1 or 2 pages. There's some very good planning methodologies that allow you to get a 1-page plan or a 2-page plan, and you get through that pretty quickly. But really what you want to lay out is, what are your business objectives for the upcoming year? How are you going to measure success, and what projects do you want to take on in order to support those objectives, right? So I wouldn't overload your metrics. I would try to stick to 3 to 7 metrics and try to keep it manageable. You can produce those so you can run your business and have good insights. It might be something as simple as revenue. It should be margin. It could be pipeline. It could be on-time delivery to clients. It could be client satisfaction. Well, you can develop those, but it's really important to understand how you're going to measure success for the year. And not only is that good for the upcoming operating year, but it'll help you understand future years going forward. Then the next thing is work with your sales team to understand what your sales forecast and what your revenue targets will be for the upcoming year. Where are those sales going to come from? Either from certain referral sources, what sectors, what product lines? Do you have resales to existing customers? Are there contractors you work with that you can go back and resell? Map out what those numbers are and lay those numbers are, because without sales, nothing else happens in the business, as we all know. And sales drives everything. And if you don't get the sales numbers correct, it doesn't matter what your expense numbers are going to be, they're all going to be off. Understand what new customers may be out there, what your competitors may be doing, and do you need to look at pricing at all? Is pricing tight? And you need to adjust pricing because there are a lot of new competitors out there. Someone's undercutting your pricing. It's important to look at that. Then from there, map out a model for your expenses. What do you need for production, for implementation, for any support areas such as HR, finance, IT? Have you aligned your expenses and your revenue, not just in the right categories, but also in regards to timing and when that revenue is going to flow? Do you have a seasonal business? And so revenue flows maybe in spring and in fall, and therefore have you tuned expenses to the best of your ability to match up with those things? Do you need to hire people? And do you need to add new installers to go out there and install because you expect demand to increase and you accounted for additional resources? Do you need to acquire trucks or equipment that are capital to account for that? So as you map all that out, it's really important to align the revenue expense targets and then align them back to your business objectives for the year. And then finalize that plan by publishing it to your leaders, by creating a method to track and report monthly. And then regular reforecast allows you as a management team to sit down on a quarterly basis is fine. Sit down and say, what's changed? Do we need to adjust and change revenue forecast? Do we need to make changes with our expenses? And do we need to make any changes to timing around things? It's very important to relook at that on a regular basis because it's been such a fluctuating year, 2020. We certainly expect from an accounting perspective, a lot of those fluctuations will continue well into 2021. Make sure you spend time on a quarterly basis, work with your controller or your director of finance or CFO, sit down, engage with them on how do you reforecast and look at how the numbers are changing on a regular basis. Any questions at this point? Okay, now I'm going to touch on this slide very, very briefly. There are 4 basic methods of budgeting. Traditional, that first method is what most people use. They take last year's budget, make some tweaks with it, and move forward. A different method is an activity-based. It's great. It's a top-down model. It looks at your corporate objectives. It looks at activities you want to accomplish. And it is a very activity-driven basis. If you'd like to talk to me more about that and ask more questions, we can take that question offline. I'll give you my contact information. Now, a value-based says, I'm going to look at all the elements of my budget, decide what creates value for the organization. And if I can't determine how it creates value, I'm either going to reduce it, my focus on it, or I'm going to axe it. Now, the one challenge with that is not everything creates value in an immediate time frame. Marketing is an incredibly valuable activity to do, but it's sometimes difficult to say that I can track a return on investment with marketing back to an immediate activity that happens today, to a sale. And so in a value-based, you may reduce focus on marketing, which is not always a good thing because it's tough to tie that value relationship back to what the return on investment is on that. So just be careful on value-based, and we should have a larger discussion if you're interested in that. Now, zero-based, I actually talked to a client about this last week, and what this is strips a budget down every year down to nothing. And you build that budget up every single year from the bottom up. It's incredibly resource intensive. Many people like it because everything has to be cost justified. And what it does is puts very tight controls on the growth of expenses and tries to maintain a very tight picture on expenses. Now, there's huge benefits to it if it's done well. If you get a great rhythm, it can control expenses, but it's resource intensive and it takes time to monitor, and it takes a very strong-willed focus on value-added activities. So that's another one. If you want to talk to me about it, I'd be happy to have a phone call or an email exchange about it. Most organizations, when they start budgeting, go with the traditional method, take last year's, do tweaks to it, adjust up, adjust downward, and go forward from there. So another thing with budgeting is the style of how you want to go through and budget. And there's really 3 ways. One is top down, say the president, the owner, the CFO, controller, sit in a room, lay out the budget and our objectives, and hand that budget down. Now, as you can imagine, what that does is creates a little bit of resistance from lower levels of the organization. They say, I have to hit this sales target, or you're going to do this with my expenses. I can't do this and this. And so you can get through that process faster on a top down, but you're not getting as much buy-in from your team on that. And it can create resistance and pushback. On the other end is a bottoms up, which is very much you turn that over to your staff, they build it up, hand it up to you, and then the management pretty much allows that to go. That one can be tough at times because the staff doesn't always look at market conditions and what's happening on the outside. What I typically recommend is more of a collaborative approach, where the leaders of various areas sit down with the president or owner, sits down with a controller, and together you, in an iterative approach, build that budget together with insight from what those line leaders see, what the business leaders see, and you work together on building that budget. Now, it takes a little bit longer to build that, but I firmly believe that what people contribute to, they have a much bigger invested interest in making sure it's successful. So that collaborative approach, if you're going to talk to me, is what I'd really typically recommend, is working together with your leadership team and building that right budget to make sure it's correct and that everyone buys into it. Now, there is also a capital budgeting process, which is heavily invested around what do we want to spend on capital assets, such as buildings, such as trucks and equipment. And you can look at that as a parallel process to what is really a revenue and expense budget that we just walked through. Typically, you try to go through this in a parallel process in a bit of an accelerated fashion, just recognizing there may not always be a large capital expenditures coming up, but it's something you want to understand if you're going to allocate capital dollars out to a large project, either acquiring a building, renovating a building, buying trucks, possibly buying a large software system. You want that plan into it. It's good to know at the beginning of the year you're going to do that. If you'd like more information about that, I'd be happy to talk to you about that. All right. Now, after you've budgeted, there really are 6 things we tend to look at to make sure you can manage to your budget. And we think these are really important. I'm going to touch on them very briefly here. Forecasting or reforecasting, I touched on briefly a moment ago. That is updating your plan for the year based on updated revenue and expense information, so management always has the clearest picture of what's coming. Cash flow modeling I touched on as well as the aspect of I want to look at what cash is coming in and going out on a week-by-week, not a day-by-day basis to understand, am I going to always have cash on hand to pay my bills? And do I need to go after my customers to make sure that cash is going to come in? Short-term cash management strategies. Can I manage that so I've got cash on hand? Similar with working capital. Do I need to look at any cost reduction opportunities and expenses? Can I take those down if revenue is slow to come in? And how do I look at capital assets? We'll talk about that more in a second. So we've talked a bit about forecasting, and what I would say is some organizations forecast, reforecast monthly. I find that quarterly, and at worst case semi-annually, can possibly work. But it's an update of the numbers. Much like when you go out in the morning, you want to see what the weather's going to be like, if it's going to rain, if it's going to snow, if it's going to be sunny. You want to understand what that looks like. And that forecast should be a rolling forecast at least through the end of the year, possibly for the next 12 months, because even in the last quarter, you want visibility as to what's going to happen in the first quarter of next year. So there are things you can do to reforecast. This does not have to be an onerous, but it's very important to give a clear picture of what's happening based on changes in revenue and expenses as they go on. Cash flow management, we've talked about this a little bit. One of the things that's really important, and one of the mistakes organizations sometimes make, is if we talk about cash flow, we're talking about outstanding receivables, is they go after the oldest receivables first, those that are 180 days or older, and try to bring those in. The really important thing to do is focus on your largest outstanding receivables. Now that seems like you may be casting those really long-term receivables out, but if you're 180 days or further out, the question is, are those collectible? But if you've got a large pool of receivables from either one or a few sources, those will make the biggest difference to you in your cash flow. You want to make sure you attend to those large-scale bubbles going through your pipeline and going through the snake, in essence, that you correct and jump on those. So whoever's doing your collections, whoever's doing your cash flow management, make sure you focus on large outstanding receivables and go after those as aggressively as possible. And once they get out there to 180 days, don't ignore them. but also recognize when they become uncollectible over time. You're always trying to keep accounts receivable and accounts payable in balance on terms. Customers want to slow down payables, and vendors want to accelerate payables to them. And what you're trying to do is manage that. Don't get reversed where you've got 10 days on payables to vendors and 45 to 60 days on collections from clients. That'll put you in a cash flow problem. So watch how you balance that out. Okay. Cash flow modeling we've talked about. Here's an example. A 13-week rolling cash flow forecast really covers about 3 months. It allows you to look week by week what cash is coming in from what customers, and it's cash, not accrual. Make sure you're focused on what that cash is coming into your checking account on a regular basis. Make sure that you understand what expenses have to go out. And any period where that goes negative, you want to focus on that very, very clearly and know how you're going to accelerate that cash coming from your customers or potentially decelerate payments to vendors. And the only other result is to dip into credit lines or potentially credit cards to cover some of that. So, working capital strategy. One of the things that happens in capital intensive businesses is you tend to invest in a wide availability of inventory at times because you want to be able to deliver on time, especially if you have delays in getting products on hand. At this point, it's a great opportunity to focus on your leading product lines or possibly your granite set that may be selling the best or marble selling the best. And don't try to restock everything. Maybe focus on the ones that are the fast sellers. You can have fast turn on that. Try to keep your working capital low, your dollars low, and don't have as much leverage on that. Keep your debt lines, manage your debt carefully. You want to make sure that you've got available lines of credit and just track all your expenses to make sure you can manage those carefully and tightly. Okay. One of the things that can be important, especially in a period like now, what we've had is a lot of discussion with clients about the need for cost reduction. And unfortunately, with Paycheck Protection and the COVID-19 situation, we have had many clients lay off employees, right? And sometimes that's absolutely mandatory and necessary. And it's sometimes the easiest thing to turn to. The one challenge with doing that is that if you lay off critical employees, sometimes they don't come back. And it is very important to understand, especially as you budget, where are there opportunities to manage expense and cost reduction if you need to during the year. So the big bucket areas that I see in most businesses, it's payroll, it's inventory and supplies, it's property, plant, and equipment, and that includes maintenance and insurance contracts and other things. Contracts can be from subcontractors and service suppliers and maintenance people and many other things. And if there's ways to change those contracts or adjust those, you're looking for those big tickets are that you can make immediate impact on some of those expenses. Can you adjust insurance policies and change deductibles? Can you change terms and liability? Can you work through those things, right? So it's important to understand where your expenses are going. And if you need to in the middle of the year, what you can tweak along the way to do that, all right? Make sure you have targets for cost reductions if you need to, and you can bring those in line with what your forecasts are for revenue so you can manage revenue and expense tightly. Okay. Capital asset management. One of the things that we talk to clients about is things like buildings and useful asset life and equipment. And this is a time right now where you need to think about extending useful life on whatever assets you can beyond depreciation, right? And wherever you can not buy a capital asset, but potentially you can lease, or where you can to turn into an expense item, or where you could rent a capital asset for the short-term project. I know in construction we like to buy, but where you can rent and keep cash on hand, keep cash liquid is really, really important. So what I'd like to do is flip this to a really important topic. And what John and the Rockheads team has done, spent a lot of time putting the benchmarks database together. And we'd like to encourage you to participate in that benchmark database. Number one, because it gives you a really good insight into how you compare against other participants in this database, right? It gives you insight on where you're strong, where you may be underperforming. And it not only compares you by the install base that you're looking at, but also by revenue and size. It allows you to see a very good baseline of how you stack up against other players in the industry. And John's built this database to look at a lot of details and look at a lot of different viewpoints. Now, I couldn't put screen captures of all the different capabilities in there because there's so many different reports, but I think John has a great tool for you to see how you stack up and where your sales breaks down, where your expense breaks down. And for me, the important point is really in this slide. So as you complete this benchmarking tool, what you've got is all the categories of revenue expense, and this is just a breakdown from the sales. And what happens is it really allows you to classify all your revenue expense almost into a budgeting format. And as you populate this database, what you've really done is built a notional budget for yourself for the upcoming year, right? So if you don't have a working budget, by populating this benchmarking database, you will have a budget that you can use going into 2020 or 21 to start with. So I think this is a valuable tool, and I really encourage you to take a look at it and take advantage of it. It solves not just benchmarking, but it also helps you build that baseline budget for the upcoming year. So
yeah, it's also,
summary,
let me
go ahead,
can I
John.
comment on that a little bit, Dave?
Sure.
So it's also, the vision is to help in that collaborative effort of setting your budget and then managing it going forward, and also as a resource of how others are doing it. So when you're doing the collaboration with your team, you can really get some insight on what is possible or what areas you should work on as you compare to the others, which then helps you reset your budget and dial it in year to year to year. So that's really the vision. It also considers some other things in play of business valuation and focusing energies on increasing the value of your business, not just the year-to-year return on your business as well. So there's other tools in there to expand on that. So thank you for highlighting that, Dave.
Okay, I think we're coming up right to the top of the hour, and I apologize for running so late. What I would say is I'm sure John will make this presentation available if you'd like it, but if you have any questions, you can either ask them now or my contact information is there, and please feel free to reach out to me. John?
Yeah, Dave, thank you. If anybody has any questions, we're going to open it up as well. We do post and we put in our website every presentation. We record these calls, and that's on our website as well for future access or reference at any time. So it is available. Any questions for Dave? Carmina, I know you had a question.
Hi, thank you. I have a question for Dave and the Rockheads. So are you keeping your regular sales budget for the year, or are you modifying? And if you are, what's plan B? You know, it's so uncertain, or is it not? That was my question.
Yeah, so I can answer that on two layers. One is from our client base of market, so diversified against so many industries, we'll give a different answer in every industry. I think the question is, I would ask you to look at, what are you seeing right now as far as trends? Are you at 50% of where you expect to be right now? Or are you expecting, or are you above that or below? How close are you to where you expect to be right now? Forget about budgets, but how close are you to where you expect to be? Because then the question becomes, what do we expect in the fall? Now, I will tell you, everyone I've talked to from the healthcare community says they expect COVID-19 to raise up in the fall and get worse. But what I'm hearing from construction companies is that many of them are, 75, 80% of what they plan for the year. And so if that's what they're seeing today, I think it makes sense to probably try to hold sense to that 70, 80%. Now, what I would say is I don't know that we're going to get another paycheck protection in the fall. So from a cash liquidity perspective, you probably want to be talking to your banks to see what your credit lines look like and your available cash liquidity, or American Express to be able to get access to cash just in case something doesn't happen that way.
Thank you,
Yeah,
Dave.
there's a question that, thank you, Dave. There's a question on the chat box. I'm going to address it. Maybe, Dave, you can expand on it. I think you and I had a little sidebar dialogue at one point in time on this. So the question is have any Rockhead members worked through the process to request forgiveness of the PPP loan? If so, any learning points yet? And I personally have had discussions with various people, and what I'm going to recommend right now is to hang tight on working through the forgiveness piece, because there's more time to request that. And because of the reason why is because there's many discussions out there of how the tax treatment is going to be on that forgiveness, meaning that it might not be a taxable event and you'll be able to use the expenses. So from what I'm hearing from various different parties is to hang tight and kind of let those things wash out, because it might work out in your favor at this point in time. And Dave, maybe you can expand on that, what Markham LLP is saying.
Yeah, from an accounting perspective, everything we've seen, if you qualify for forgiveness, it should not be a taxable dollar amount. But one of the things I would say, and it's sort of what John's saying, is it feels like the government has changed the story on a lot of this stuff almost on a weekly basis, especially early on. And knowing it's the government and that they have the flexibility to change their mind on anything, if you don't have to file for forgiveness right now, probably extend it out. I think John's comment is correct and appropriate.
Thanks. If you guys have any more questions, feel free to put something else in the chat box. What I want to highlight a few things that, again, we're going to be putting a big push on the benchmarking program. Use this time to upload your data. The more participants we have, the better data and the better reporting we'll have that will help all of our members. So this is the time to do it. We're trying to shoot to have this done and everybody entered by August 31st. That gives me some more time to prepare that report and then get something out to everybody. So please start working on it. We're going to be pushing you. If you're having trouble or you don't have the bandwidth, maybe some of you wind down or restructured your finance teams. We're looking at offering a service, myself personally, through the Rockheads, and maybe bringing on some help if you need to, for us to help you enter, depending on the amount of requests for that. We can negotiate or maybe improve the pricing model to help others process and get their benchmarking data in and kind of handhold all the way through the system, if that would be helpful. We sent out a survey via Facebook, seeing what kind of interest or where people are at with the benchmarking. Most of you guys from the finance teams, I think, see the value in it. So, and it's just more about bandwidth. If that's so, let us know. And then Amanda's going to be sending out the same survey via email if that's easier for you to fill out. So please take some time. And if you're talking to other Rockheads, try to encourage them to participate as well. Last year, we got about 50% member participation. My goal is to try to get that up to 75% this year. Anybody have any more questions for Dave? Okay. Well, Dave, thank you for your time today. We'll keep having these calls. I don't remember exactly what our next monthly call is all about, but it should be interesting. We have some others from Markham LLP that's going to be presenting on our finance. Of course, we have our operations call, and then just so you're aware, we rolled out a sales ambassador call. We call it the sales rally, which was really good, that we rolled out on Wednesday. So keep on the lookout, and thanks for your participation, guys.
Thanks, everyone. You guys have a great day. Thanks, Carmina.